How y'all doing? Hope everybody been good. I want to drop in and give y'all a quick little video. And in today's video, we're going to be talking about money. Now, we all know what money is, but just looking at it a little bit further. So we're going to be talking about the functions of money, the characteristics of money, and we're going to be speaking on like the good money and bad money. And we're going to be looking at various forms of money throughout history and seeing did they work, and if they didn't work, why didn't they work? And then we're going to be also talking about like different types of money and come back around to our present day money. Like, is that good for us or not? And I had dropped this video last week, why saving alone might not be enough for your financial future. And I feel like in that video I was talking about a lot, but I don't know if I explained it well. So if you're familiar with the things I was talking about in that video, you understood. But like, let's say like my 10-year-old cousin was watching that video. Did she understand what I was saying? So really breaking that video down into further videos and just speaking on like the history of things and how our current money system set up. And I think once you like, understand that from a basic level, it'll help you with knowing what to do with your money. And so let's go ahead and get into it. I want to give y'all a couple book recommendations. The first one I got is How Money Works. So it really breaks down money from like the beginning of time to where we at today. And it's pretty cool. I swear I didn't know this till just now, that it's a visual book. So I be listening to a lot of audio books. So I was listening to it from the audio version, but I didn't even know it had the visual, so I'm gonna have to get the regular book. But that's a good book talking about money. This one, the Bitcoin Standard, it's a Bitcoin book, but the first half of the book is just completely talking about money. Like what's good qualities of money. What's qualities that good money have. And then also the Creature of Jekyll Island. It's just breaking down the whole system, like the history. It's talking about money in there and just like the history of our Federal Reserve and how our money system set up today. So I got those 3 books if y'all want to check those out. But let's go into the video. So with money, we got 3 functions. We have 3 functions of money. First one being a medium of exchange. Money is accepted in exchange for goods and services. So if I go into the store and I wanna buy some shoes, they $100. I exchange my money and get shoes in return. So we just did an exchange. Before money, it was barter. So what barter is where we have to. It's a direct exchange of goods. So let's say, obviously this is prehistoric time. So let's say I have cows on my farm and you across the street and you have chickens. So you might do it where I give you one of my cows, you give me 5 of your chickens. We just did a direct exchange. Now, where that gets tricky is, let's say if I have my cows and you want one of my cows, but I don't want none of your chickens. How we gonna do business then? So then we had to find like a third party of a person that has what I want, and that it gets tricky. So that's where money come in. If I have my cows but I don't want none of your chickens, you could just give me some money for one of my cows. That money sped up the process. It made things a lot easier. And the second function is a unit of account. So it's a common measure for pricing items. I go into the store, I might buy shoes that's $100. Then I might go to the grocery store, I might buy some fruits that's $20. It's seeing how much things cost. And one of the most important ones is a store of value. It allows for you to save your purchasing power over time and can hold value in the future. So you want money that's going to retain its value over time. You don't want it where you have $500 today and 10 years from now, that $500, you can't buy the same things with it because it's losing value. So you want money that's going to hold its value. And then speaking on a couple characteristics of money, you want money that's durable. So it's sort of kind of speaking on the store value thing, but in the physical form. So let's say if I have bananas as money, that wouldn't be a good form of money because obviously they won't even last a week and they bad. You want money that's portable. I want money that can be moved easily. You look at different forms of money throughout history. We've had money that wasn't as portable and they made it work. If you look at, hold up, y'all, I gotta find it. So they called rock stones, and they were like big, huge stones that you could see. Like they were bigger. Let me see if I can find a picture. I can't find a picture. But they were basically like bigger than humans, and they would use. Look, there's you see. Look how big that is. They used that as money on their island. So we've had forms of money that wasn't as portable, and they didn't made it work as well. Um, so we got portable. You want money that's divisible, so it can be broken down into smaller pieces. If you look at throughout history, they had it where cows and cattle was money. That's an example of something that's not as divisible. Can you break a cow down into? I mean, you can, but it gets real messy. You want money that's acceptable. If I take this money to the store, is they gonna accept that as money? Technically, anybody can make their own money, but is people gonna accept it? You want money that's widely accepted. And then one of the main things, you want money that has a limited supply. So throughout history, you'll see that when money is created easily, it leads to inflation, which is less purchasing power. So you want money that's not as common, sort of kind of rare. You don't want money that could just be created out of thin air, because when you have a lot of money, it leads to inflation. So, with inflation, we have it where inflation usually is higher prices, but look at it on the other side as well, is where you have higher prices because the money is losing value. So it's costing more dollars to buy the same thing. If I have it where I have a big old pizza and I have it in 4 slices, if I cut that pizza into 8 slices, it's more slices, but it's still the same amount of pizza. So what you have throughout history is where you have people that just create money and more money. You have all this money chasing the same product, so it's bidding up the price on that product. And on the other side of it, it's your purchasing power. So that's what we were just talking about with the store value. So let's say if I have $500 today, which in our current system, that's how it works, where our government just keeps printing money. If it keeps having all this money in circulation, chasing the same products, it's going to lead to less purchasing power. So if I have $500 today, 10 years from now, that $500 will not buy me the same thing. It'll buy me less. So it might have it where $500 a day could buy me a big basket of groceries, but 10 years from now, it might be where I can only buy half of what I could buy today, So you want money that has a limited supply. More money to pay for the same thing, less bang for your buck. How people like, I want bang for my buck. If you have money that's created easily, you're getting less bang for your buck. And basically what I was saying, $500 in a savings account won't be you can't buy the same things with that $500 as you can 10 years from now. Inflation's going to, be eating at that $500. And you want money that has trust. So sort of kind of same thing, acceptability, like people believe in what they're having, what they're using to have value. When you have it where people not really trusting the money, it leads to problems because people don't really want to use that money. And then we have hard money. So hard money is money that's not created easily. So that's what you want with your money, because when you can't really affect the supply as much, it really helps retain its value. And then, okay, so remember we had barter before money ever existed. So then as societies became more and more complex and people were getting smarter and things, we had money start popping up. So we have commodity money. Money that has intrinsic value because it's made for something valuable in itself. So in intrinsic value, it is basically where even if this thing wasn't money, it still has value. So throughout history, we've had people that have used cattle as money. They've used wheat as money. They've used salt as money. They've used all these different things. And even if these things weren't money, they were still valuable. And sometimes you see with different words, different words come from like prehistoric times when we use these things as money. So if you look at salary, they say salary comes from salt because in Rome they would pay soldiers with salt. You look at pecunious, well I say impecunious in the situation, but pecunious is cattle. So pecunious means having money. So they related that to cattle. And then so commodity money is things that they had the different things that they use as money. And you look at different things. So you have glass beads in West Africa, and if you look at that, I think they say where like Europeans had came in, they could create it real easily, and they came in, and now it's all these glass beads, so it inflate. It's all these glass beads going to circulation and inflate the supply, destroying the store value. If you look at during World War II, I want to say they said in Germany, people were using cigarettes as money. And then as we go on throughout time, you remember we have all these things money, but two commodities that have won throughout history is metals, and in particular gold and silver. And the reason these things have been real good at being money is they really check off all the boxes. So even if you look at gold and silver today at all time highs, if you go back thousands of years, they still have gold and silver still have value. So throughout time, throughout all these societies and empires, gold and silver has still passed the test of time, particularly like gold over silver in particular. But so then we start, we keep getting more and more advanced. We had the first coins started made. So they were made in Lydia, modern day Turkey, and they were made from a mix of gold and silver. So now we got coins, people exchanging coins for money. So it was where you using cattle. Now we have an actual money, and it's used strictly as money. It ain't used for nothing else. So that's still commodity money, but now it's like with the precious metals, and particularly, like I said, gold and silver being the ones that's beating out all the other ones. And then this is what we start talking about bad money. So in Rome, they had coins, but they did a thing where they would do coin clipping. So let's say if you have a coin is worth 1 ounce of gold, they would clip some of the coin to where it might be 0.8, but they still saying it's 1 ounce of gold, and that led to inflation. Because let's say if I forgot what the people that was called, that was coin clipping, but let's say if you have a person that's clipping coins, and he got 0.8, he got 5 coins, 1, 2, 3, 4. No, that's 6. My bad. He got 5 coins, so all 5 of his coins have 0.8 of an ounce of gold, but he's saying it's 1 ounce. So 0.8, 0.8, 0.8, 0.8. With that 0.2, he done created a whole nother ounce out of clipping. So he done created a whole nother coin, but it's still not more gold. So it's leading to inflation because you got more coins in circulation, but it's not like it's more gold. So it devalued the money. And let me see. Usually when you had the government start interfering with the money, it leads to problems. So even the government started coin clipping, and they made the people accept that money. So when that happens, you have what they call Gresham's Law. So bad money drives out the good. So if you have all these bad coins in circulation that's been clipped, the good coins that haven't been clipped, they actually worth that value. People start hoarding those because that's good money. They're not going to use it because it's more valuable. So you'll see that throughout history when like the money start going bad, the money that is good, people start holding it. Like they're not using it because it becomes more and more valuable. And then we have a couple of examples in history where there was good money. We had the Byzantine Empire. They used the bezant, and it lasted over time. And what you'll notice is like it's sort of kind of the same thing today, where like governments could get super strict. Certain empires got super strict with their money. Like if you got counterfeited, if you were caught counterfeiting, sometimes you'll get put to death. And even today, you're not going. If you get caught counterfeiting money, you're not gonna get put to death, but you're gonna definitely do some time, like a whole lot of time for that. So that's commodity money, and then we start having representative money. So let's say a person walk around with his gold coins, and let's say maybe it was too heavy for him, or maybe he just didn't want to walk around with the gold coins as much. He would leave the gold coins with the goldsmith. So the goldsmith will store the coins, and the goldsmith will give him a receipt saying, okay, let's say I had 10 gold coins. He'll give me a receipt saying I got 10 gold coins. So I could use their receipt to go make transactions. And then they had it where you start giving out smaller receipts. So in a sense, it's sort of kind of like banknotes. It's sort of kind of like dollars. Like okay, let's say I got 10 gold coins. I go to the goldsmith. I give him my gold coins. He hold the gold coins. He give me a receipt, and I use that receipt to pay for things. So that way I ain't gotta walk around with all this gold. My homeboy might have 20 gold coins. He gonna get a receipt saying he got 20 gold coins. So that's what they call representative money. And then you still have all these different forms of money start popping up, like paper money. I think they say the first form of paper money was in China. So now you got where they using like sort of kind of paper in a sense. And then, like I said, all these different forms of money. And then we go, we can skip to sort of kind of the day where they have fiat money. So fiat money is money that's not backed by anything. It's valuable because the government says it is. So the value is in the faith of the government. And talking about fiat money, we go present day sort of kind of, and I'm gonna make a whole video on talking about the gold standard and fiat money. I'm gonna break it down, but basically we had it where in the 19th and 20th century, most of the countries, they were on a gold standard. So what a gold standard is basically where you can't print more money than gold you have. So let's say 1 ounce of gold equals $10, and the country has 10 ounces of gold. That means they can't print no more than $100. So with a gold standard, it was good in the sense because it held countries responsible. Remember what I was saying earlier. The more, if you just print money, it leads to problems. It leads to inflation. And if you look at like even going back to colonial America, like 1700s, they would always have that problem because they would print money and always lead to problems. So we have it where we on a gold standard. You can't print more money than you have gold. So if you look throughout history, you have wars always have a big role when it comes to money. Reason being, wars are so expensive. So let's go, if you go like even the World War I, when Britain and them first got in the war, they had to go off the gold standard because that's the problem with the gold standard. It's a good thing because it's a limit on how much gold there is in the world. So if you need more money, you can't really print more money because you ain't got no more gold. So what they would do, what the people would do is they would go off the gold standard. So they would print more money than they have gold, and then say we'll come back to the gold standard eventually. So with Britain, like I said, they World War I, all the countries, they went off the gold standard because they needed so much money, and they didn't have that amount in gold. So that's sort of kind of where we start tipping the scale of getting off the gold standard. So they said they was going to come back to it, and they eventually came back to it, but they sort of kind of came back to it too late. And we'll talk about that in another video. And, talking about fiat money, like I said, with the wars, it caused real big problems. So if you look at Germany after World War I, they kept printing their money. It led to what they call hyperinflation. So the money became completely worthless. Like you'll see crazy stuff where they saying like the money was, you'll have $1 million when he buy you bread. So like that's extreme examples of like where printing money goes really, really bad. So they call that hyperinflation. So remember, we on the gold standard, and then like I said, I'm gonna make a whole video talking about this, like how we got off the gold standard. But basically in 1971, President Richard Nixon took us completely off the gold standard. So with that, since then, we've been what we have fiat money. And like I was saying, fiat money it's not backed by anything. So we in the gold standard, we had money that was backed by gold. You can't print more money than you have gold. Now we on fiat money. Fiat money is where you can just, the money is backed by the faith of the government. So in essence, you can print as much money as you want. And that's sort of kind of how our current money system is. We're in the fiat money system, and the whole world is basically. And so with the gold standard, you had government sort of kind of be responsible because it's only a certain amount of money you could print because it's only a limited amount of gold in the world. With the fiat money, it leads to a lot of irresponsibility because governments can print as much money as they want. And that's sort of kind of where we at today with it. And you can sort of kind of feel it, like, even as me being an adult, if you go back to COVID, where they printed a lot of money, you could feel it a little bit today, where things are where things are more expensive, and in the fiat money system, they just keep printing and printing and printing and printing, and they sort of kind of just keep kicking the problem down the road. But what if it gets to a point where the problem just eventually you're gonna have to face the problem, and that's what a lot of people say with our current money system. Um, it just keeps making things more and more expensive, because like I said, more dollars keep chasing the same products. It's gonna lead to higher prices. And we've been on the fiat money system for the past 50 years, 1971, that's about 55 years. So just seeing where that's gonna go with it. So with us being on the fiat money system, what can you do with your money? So when you get paid at work, you got your you get paid with your fiat dollars. You pay your bills, and with your money left over, hopefully we continue to save some of that fiat money, because we need it for liquidity. It is very liquid, where we could spend it easily. So we save. You remember, we're saving an emergency fund, 3 to 6 months of expenses saved up, and then even after we have an emergency fund, just saving in general, because that helps us. But beyond that, making sure we're looking at different things we could place some of our fiat dollars in that's going up in value. So on the consumer side, things are gonna continue to keep getting more expensive. Also look at it from an investor side. Things are gonna continue to get more expensive. So assets are gonna continue to increase in price as well, because they're inflating as well. And in the short term, sometimes it might hurt because you have what we call bubbles. But in the long term, if you look throughout history, assets have kept getting high, more and more expensive in price as well. So if you have your dollars in assets, essentially you're beating inflation, your purchasing power is preserved, and also your wealth is going up. So that's what we had to start thinking with our minds, like, okay, I'm saving money, hopefully, and then beyond saving, where else can I put my money into various assets that's going to keep going up in price as well? Because, like I said, if the dollar is devaluing, it's costing more dollars to buy things. Not just things like groceries and clothes and stuff, but things like assets as well. So we have to start putting our mind there as well. And me as a beginner investor, that's what I'll be thinking about as well. So just putting y'all through my thought process. Because if you look at, obviously, extreme examples of fiat money, we have it where Zimbabwe, Venezuela, where they just printed so much money, it became completely worthless. So that's what we got to start thinking with our minds as a community, and trying to start thinking about it as well. Because with the fiat money, they say it has no intrinsic value. So it's talking about commodity money, where it has intrinsic value. Even if it wasn't money, it would still be worth something. If you have a dollar, it's just a piece of paper. You know what I'm saying? It ain't really worth too much of nothing. And in our community, we love dollars, but we also have to start loving assets, because the dollars, inflation in a modern economy, inflation is gonna happen. Like they say, for the economy to grow, we need inflation. So they want it at 2 to 3% a year. So if you have your money just sitting in cash, it's gonna continue to lose value to inflation, and you're gonna lose purchasing power. So you want your money in things where it's preserving your purchasing power. And in our community, we love cash. And let me not get on here saying, okay, somebody hands you $100,000 in cash today, what you gonna say? They ain't worth? No, obviously. But it is levels to it, to where you want to start having an investor mindset and diving a little bit deeper. Why should you be an investor? Because if you just save all your money, the way our system is set up, it's not meant for savers, because inflation is gonna keep eating that. Like I said, you want to save some of your money, but you also want to start investing some as well, because you want your purchasing power to be preserved. And we didn't even speak on like digital money in the video, like where the 1950s we had the credit cards, and you can start getting all these different forms of money, because like I said, when we went from barter to money, it sped up the process and made things faster. So if you start looking at money, you look at the evolution of money over time, everything just keeps getting faster and speed. Like transactions start getting faster and whatnot. But, that's what we spoke on today in this video. We talked about, a couple books that you could read. We talked about the functions of money. We talked about characteristics. We talked about inflation and purchasing power. We spoke on a couple different forms of money throughout history: commodity money, representative money, and then we came back to our current money system, which is what was on the gold standard. Now we have fiat money, and what can we be doing with that money? That fiat dollars that we getting from our job and our business, where can we put some of the fiat dollars? So if y'all have any questions, please reach out to me. If y'all could like, comment, subscribe. If you is liking the videos, please tell a friend. Also in the comments, what kind of videos do y'all want me to make? These next couple videos, I'm going to still have the personal finance videos coming up, but I also got these videos where we're talking about the system and we're talking about how different things work, because once you realize that from a basic, it helps you understand what you should be doing with your money. So like I said, appreciate y'all, man. If y'all could like, comment, subscribe, and y'all stay blessed.